Hey guys, John Paulamy here, Actionable Intelligence. Wanted to take a few minutes to talk about the recent market volatility, the opportunities that I'm seeing, and what I'm doing. So obviously I don't have to go into the minutia of what we're seeing in the markets, up 1,000 points one day, down 400 the next day. What I want to talk about is specific to what I'm interested in. And one of the things that I'm interested in that you all know is uranium. What we have seen and what I said would happen is that we saw a break in the markets, the overall stock market, we would see most uranium stocks go down. Why? Because uranium stocks are stocks, and when the general stock market goes down, most stocks go down, 90% of stocks go down. However, there are pockets of value, and I think that that's uranium. You know, we're talking about a market that's already down 80 or 90%. I guess it could go down another 80 or 90%, but I don't really see that. The fundamentals, we've talked about it ad nauseum. We're positive on the fundamentals. So when I see something like Uranium Participation Corp selling at a 10% discount, I'm in there buying it. I'm not saying you should go out and just buy all the juniors willy-nilly, but there's definitely opportunity in there. We've just went through tax loss selling. A lot of weak hands that don't have the patience, that aren't able to arbitrage time, have been weeded out of the market. They've just sold. And there's not a lot of liquidity in these names. So I wouldn't take it as a bad thing as if you see one of these stocks that you're in, these juniors. I mean, some of the juniors that I hold are off 30%, 40%. Nothing fundamentally has changed in the uranium market, yet they've just been thrown out. You can go in there and, sell 10 or 20,000 shares at the market, and that will push one of these juniors down. There's just not a lot of liquidity in volume in a lot of these stocks. So I think if you're a long-term speculator and you're able to arbitrage time, and what are we talking about time arbitrage? This is one of the factors that I'm a big advocate of that gives us the advantage over a lot of the professional money managers. And time arbitrage is basically the ability to have a long-term perspective. I've said this before in previous videos last year. The average hedge fund that's having to liquidate right now because limited partners are dogging out the general partner and the investment and the chief investment officer of these hedge funds, they're having to sell because people want their money back. And this is why we have the advantage. Somebody that's a hedge fund manager that's been in uranium and sees what we see as a generalist investor or speculator and put money into the uranium market, it hasn't really moved. And, with the general market volatility and the recent down market, these stocks have got hit just like other stocks. So they're forced to sell, and then they have to answer, and then they're out of a job, and then they're gone. So our ability to be here for the 3 to 5 year time frame, because we are not beholden to limited partners in a hedge fund or an investment management board that oversees what we're doing that we have to go and explain to. We don't have that. So we're able to arbitrage that time. We can go over these rough patches. And I should say we should be in taking advantage of these forced sellers. Nothing fundamentally has changed in the uranium market. 232 still coming down the line early next year. The supply-demand fundamentals have just, every day that goes by, get better. There's no uranium mines being developed as we speak. So when you see physical cash, uranium selling for a 10% discount, I mean, you got to be in there buying it if you're a believer in uranium. Now, I've been an advocate of saying that this bull market in uranium is going to take longer to develop, and it's probably going to last longer than the previous one. And the reason I say that is because of the lack of investment in new mines and in the development of resources. I am just beside myself thinking about how this is going to play out. The amount of reactors and the demand continues to increase, albeit, maybe a few percent a year or a percent a year. But the supply goes down. The product sells for well under the cost of its production. So it's basically the industry is in liquidation. I have said this before. What does that mean? We are living off the carcass of previous investment. Nobody is going out and committing $1 billion or $2 billion or $500 million or whatever to building and commissioning new uranium mines. So I think this is just tremendously bullish. And then we have a situation where the market's down and it gives us an opportunity to go in and buy quality assets at a discount, I think you have to do that. Now, some of the things I've seen in the comment section and some legitimate pushback is, well, why buy now? It could go lower. Absolutely. I'm not saying you take all of your cash reserves and all your dry powder and just jump right in 100%. But I think you can go in when something's down 30 or 40%, or in the case of physical uranium where it's off 10% from its net asset value, you go and buy another tranche. If it drops, then you buy another tranche. If it drops some more, then you buy another tranche. The only reason you would stop buying is if we had some kind of Chernobyl or Fukushima event that, rocks the whole industry. So I think timing markets is very difficult. Sitting here saying that, some of the best market timers in the world have went bankrupt trying to time markets. I think the best thing to do is understand the long-term fundamentals of this particular industry, which I think we do. We've talked about it enough. And then when prices decline because of general market volatility, you should be making that volatility your friend. There's nothing to be afraid of. If something's off, 20 or 30%, that's on something that let's say you were somebody that was in the market to buy a vehicle, and you saw that the particular vehicle you wanted to buy was 30% off. Yes, you'd go, you'd be excited. Same thing with, canned tuna fish. It was a 50% discount and you like tuna fish sandwiches, you'd go load up. But people have this psychological block when it comes to stocks or comes to these assets. And you really start thinking about them as businesses and pieces of a business or an asset like uranium in a drum. If you can buy something at a 10% discount to its market value and you think it's going up over the next several years, it's just free money laying over in the corner. Go over and pick it up. But people have this psychological block. So I'm not a market timer. I take the criticism. People say, well, the market dropped. Ha, ha, ha. You're down 30. I'm down 30 or 40% in some of my positions. Newsletter sales have dried up because this is how it is. People get scared when the market drops. They don't really know how to analyze markets. They don't understand mean reversion. They get emotional and they sell, or they get all excited and nervous. I don't do that. That's from experience. I'm convinced of my view on uranium, for example, and I am not going to be swayed off unless I see some data points that are going to change it. I have not seen that. So if the price of these assets drops and I can buy something, for 50 cents on the dollar or 90 cents on the dollar, I'm going to do it. And that's what and I don't say you just blow all your dry powder. If you are one of these people that thinks, okay, well, it could drop more, well, then buy a tranche, because you can't time it 100%. Buy a tranche, and then if it drops some more, buy another tranche. That's how this is done. And then over the next 3 to 5 years, as this thing plays out, and it's going to, I think, play out very drastically to the upside, then you will be rewarded. But I think selling or getting panicked or getting nervous, that means you're not really having a lot of conviction in your view because you haven't studied it sufficiently where you are confident. If you think we're going to have another 2008 general GFC, psychotic break to the downside, then maybe you shouldn't be in the markets at all. And I still think nuclear reactors need uranium even if we have a depression. So the lights aren't going to go out. I mean, even the lights are still on barely in Venezuela, and you see what's going on down there, or even in Zimbabwe. So I'm not, there's a lot of emotion, and I think there's a lot of people have talked themselves into a bear market or talked themselves into a negative pessimism and have kind of avoided the facts that are relative to certain of these markets. You have oil stocks trading at the same levels that some of them were trading at when oil was $26 a barrel and the Saudis were trying to drive shale business out of business. Tremendous bargains there. Oil underpins every activity that humans do. It enables civilization. I don't say this to be hyperbolic. It's true. And I don't see oil staying down at $40 a barrel, $43 a barrel, whatever it is. And I just don't see it. So you're already seeing shale companies paring back in the Permian. I'll talk about that more in the weekly update. But some of these things, these markets are volatile. People are scared, they're nervous. So everything just gets thrown out the window. And I think you should take another look at it. I think you should really understand what you own And I think that, you know, somebody said to me the other day, well, haha, it's not working. Well, I've had, you know, I'm a big poker player. I like the science and study of poker and mathematics. And, you know, the best hand you can get in poker on Texas Hold'em, at least, which is what I play, is, you know, 2 aces. And most of the time you will win a hand if it's played correctly. If you play it the way you're supposed to, you will win that like 80% of the time, or something crazy. But it's not 100%. So what I'm trying to say is, you still play it the same way every time, even though you can have a bad beat. So nothing's 100% certain. It's the same thing in these markets. If we've analyzed the supply and demand dynamic in uranium, we know that similar to what happened before in other previous commodity cycles, where different commodities were being produced for under their cost of production, and we know what happens. That's like getting dealt, you know, 2 aces with your first 2 cards. It doesn't necessarily guarantee you're going to make a profit, but the setup is perfect. It's the same thing in oil. There's no guarantee that we're going to be profitable, but what we're saying is the setup is similar to what we've seen in the past, and we've seen this, and we know that when it sets up like this, that the odds are in our favor. And I don't know what's going to happen in a week. I don't know what's going to happen in a month. I don't know what's going to happen in a quarter, or even in 6 months or a year. But I can tell you that when these markets are undervalued like they are, mean reversion usually comes into play, and they move back up. So I'm a buyer of certain of these assets. I'll take the criticism. Everybody's different, but I'm still confident in my position. So I just want to get this video out, kind of explain a little bit about psychology and about what we're doing here and what the opportunities that do exist. Okay, so appreciate it, and we'll talk to you on the weekly update. Thanks, guys.